Welcome into this edition of The Roundtable. I'm Bill Priestley, joined by our Freightonomics crew, Zach Strickland, Anthony Smith. He's headed off to get some French fries shortly after this particular broadcast. Gentlemen, thanks so much for joining us. We're going to talk about the topsy-turvy world of freight. And let me submit an analogy to you that I think we talked a little bit about this yesterday. But imagine the economy being a placid lake. And then all of a sudden, the stimulus or the pandemic happens and somebody throws a big rock into it. And now all of a sudden, I think we have the ripples going out, and now we have the ripples coming back, and nobody really knows what's going up and what's going down. And we get caught in this kind of upside down world where we're at right now in terms of inventories being so high, congestions at the ports, and I don't think anybody really has a real plan of what's going on right now. So let me ask you both, to lead off of this, is this scary for you? And if so, what is the scariest part? And Zach, I'll start with you.
Yeah, I mean, anytime we have this level of volatility, I hate using buzzwords or cliches, but the unprecedented, action in the economy right now in the freight market has really, it's really applicable in this scenario. So you're looking at the NTI, the National Trucking Index, and anytime you see these sharp declines or sharp increases, this is something that is painful for any kind of operation and operating environment. And it is extremely disruptive to company activities that have grown accustomed to, some level of stability, things you can rely on. They're all broken right now. Now, during the pandemic, you just talked about it, where the first wave of it was this ripple where things got really active. Nobody knew what to expect. Basically, everybody was running blind. We're still running blind 2 years later, and you can see that line that's drawn there from about March to May. That is a tremendous drop in the spot rates or truckload spot rates. And you can see that there was like this steady climb of the spot rates throughout most of 2021, and things were starting to settle back down kind of slowly. And then they just dropped immediately. So that's unnerving to a lot of people. I don't know if it's scary to me because I'm not operating, but it is a very nerve-wracking space.
Anthony?
Yeah, Bill, I like the analogy of a placid lake, and then you just see this just boulder just being dropped, and then the ripples go out and the ripples come back in. And I think one of the things that really drives that home is that you have to remember those ripples that come back in are going to be directly corresponding to the amount of ripples that went out. So essentially talking about any time of potential overstimulus and stimulation in an economy, a real recession is going to be correlating to the amount of stimulus that's happened beforehand. And now in terms of this being somewhat of a scary time, I'm not too much scared of the current situation. I would be more afraid of the potential reaction to it, the potential policies that are getting put in place, because a lot of times that we see, levers start to get pulled with unintended consequences. So as an economist that is really apolitical and really kind of laissez-faire, I want to just see market equilibrium be met. But a lot of times it's going to be a lot of levers being pushed and pulled on that's going to really make a lot of issues worse as opposed to just sweating it out.
Zach, one of the things that, volatility can breed opportunity. So how do you look at this from a broker standpoint? Maybe what advantages do you have that you can possibly take advantage of in this new economy?
Yeah, so brokers actually thrive in volatility. You want the market to move. It's no different than the financial markets. I think I have a chart for the spot versus contract rates to show you next. And this is going to illustrate how brokers actually have a lot of opportunity here in the spot market, because any kind of, the contract rates there are in green, and you can see how flat they are. They haven't really moved. The spot rates are the ones where they don't have these long-term agreements in place. So brokers can actually negotiate discounts and keep their margins relatively high and elevated in this environment, especially while the market is still adjusting and adapting to what's happening next. Because if you're a shipper and you've agreed to these contracts, you've been increasing rates over and over again for the past 2 years, and you're still kind of evaluating your position. Like, what do I do next? And brokers can take advantage of this in a way while things are getting sorted out and people are kind of taking in new information as it comes.
Anthony?
From my perspective, from things that I always hear in the market, it's going to be building out those relationships. I think it's something that's kind of overstated, but something that still holds true. People are going to remember how you treated them during these times of uncertainty, and now is really going to be a great time to really be able to expand and build out your network, build out your client base, because that's going to be when people are going to be needing the help the most.
Mm-hmm. Well, supply chain experts, of course, would tell you that low inventories are good, and that's the way they would like it. And now a lot of retailers don't have that. So, Anthony, let me start with you. What indicators would lead you to believe that this inventory type of economy is subsiding when it subsides?
Sure. So, of course, we have a couple of charts here. I know Zach put one up on the LMI that we're always familiar with. We have both the warehousing and inventory levels. And so when we're looking at that, that's going to be one of those first things I'm going to be looking at. This is going to be one of those areas I was looking at since December, where we saw that there was actually a tick up in inventory levels. You're also going to see some corresponding things where you're seeing those inventory levels tick up. You're going to see warehouse capacity also start to, be utilized as well. And when you start seeing that, you're also going to start to see warehouse prices go up. And so it's all going to be, of course, one supply chain, but this is also going to kind of be correlated specifically to the warehouse.
Zach?
Yeah, I mean, just like Anthony mentioned, the LMI, the inventory levels that we report with the LMI, that's the thing that I'm watching, is because it measures inventory growth. If you've watched Freightonomics, you've heard Zach Rogers talk about the LMI here, and anytime it's above 50, that means inventory levels are expanding, and it's been above 70 for the last 4 months, actually almost the first half of the year, which is extreme growth in inventory, and this is a result of over ordering. So these shippers had no idea when their freight was going to get here. They couldn't forecast demand, and now they're left with this glut of inventory. Some of it, they can kind of sell off. Some of it isn't applicable anymore. So as long as this thing is growing, this index is growing, there's still a high chance that shippers don't need that kind of, they're not going to make as many orders as they did in the past.
Well, looking at this now, what are perhaps the biggest industries at this point that are going to be hurt or perhaps even helped by the fact that we have this situation right now? Again, a lot of different variables are coming into play here, including clogged ports. We obviously don't know what's going on right now with LA Long Beach, because that could be another serious situation. But you've got a lot of clogged ports on the East Coast as well. You have inventories in warehouses and fulfillment centers that are being used as warehouses as well. So let me start with you, Anthony. What are the biggest industries that are going to be hit by this, affected by this down the line?
Certainly. So one of those areas I'll be watching for is going to be some of those seasonal items. So if you're looking at, of course, something like patio furniture or something like that, that's probably not going to be utilized throughout some of the winter months. So one of those areas that I think is going to be an interesting thought, because you said some industries that might benefit from it, and that's going to be few and far in between. But I think the automotive has kind of started to take advantage of it in some instances, and some of them have been public about it, saying that we're going to create or kind of continue to facilitate this demand for these vehicles, because they have actually benefited from it from a price standpoint. But some of those seasonal items, you're looking at sporting gear, things like that, definitely going to be critical to get it moved out, because if you're not, you're going to be sitting on that inventory for quite some time or having to sell it off at a pretty discounted rate.
Zach, who's going to be helped or hurt by this the most?
Yeah, I think anybody that's involved in furniture is definitely being in a tough spot, because furniture's super bulky. Mm-hmm. It costs a lot to warehouse. You can't, transportation costs are also elevated in comparison to the rest of them. But general merchandise, like retail, like Target, Walmart, already talked about it. It's already happened where they ordered too much stuff. They typically have a lot of seasonal goods that they ship early in the year. Well, now those lead times that they normally are relying on, being pretty consistent, they've had to expand them in terms of placing the orders for stuff that's being produced for the winter. So now they don't know if it's going to come in or not. So they're definitely, in a bad spot. However, with a glut of inventory also comes opportunity. They can probably get rid of this stuff without losing a lot, and they could probably make some sort of profit here because there's going to be the demand for these discounted goods. So I think there's going to be a push and pull. Mm-hmm. A little bit of good, probably more bad than good here in the near term, but they'll eventually get this stuff ironed out. In terms of automotive, I think Anthony's spot on. These guys are taking advantage of the scarcity principle, which is what drove that early pandemic toilet paper run. If you can manage that effectively, you actually can kind of keep your costs elevated.
So as we mentioned, of course, high inventory levels, and you have producers and buyers that are still going to have to buy stuff because they have to sell stuff in order to stay afloat. Practically, what do you expect a lot of these retailers to do in this particular case? Are we going to, and the freight industry, and how is it going to react to it? Are we going to see more freight being moved, perhaps even more towards retail outlets, or perhaps even to landfills?
Sure. So I think Zach hit on this early on in the pandemic, talking about, or not early on in the pandemic, early on in the year, talking about short haul being utilized a lot more, really kind of moving and making room for different warehouses and fulfillment centers. One of the areas I think is going to be watched closely that may not really be talked about enough just yet is just going to be the other side. So you see some industries or shippers that are going to be getting rid of inventory. It might be even more pricey to replenish some of that inventory a little bit later on, and that could lead to a little bit more inflationary pressures potentially.
Zach?
Yeah, the short haul is still very active. I mean, all the port disruptions and everything like that are still taking place. We still have a lot of cluster around these ports and the drayage operators. There's still containers everywhere. We've basically been through a mess in the pandemic. So now a lot of these docks, warehouses have containers. They have pallets scattered about. They've lost their organization. So a lot of what we see moving forward is going to be a reorganization and adaptability as these shippers are starting to become more flexible with their ordering and how they manage their inventory.
So let me bring us back to where we started. One word answer from both of you. We threw the rock into the lake. Are we ever going to see another Placid Lake?
I don't think it's going to be ever placid. I think it's always going to be an adjust and a push and a pull.
Yeah, I think yes, in some sort of long time scale, but not in the near term, no.
All right. Well, thank you both for joining us, and we will take a short break and wrap up the rest of our show right after this.